The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the December 22nd, magnificent Monday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to a great start of your day. Let's make sure that you and I, that we do all that we can to squeeze every great thing out of the day. Make sure we've got an extraordinary one. And remember, let's always remember that what's talked about is a dream. What's envisioned, well, that becomes exciting. Of course, what's planned becomes possible. But what's scheduled, well, that is real. And I want to thank you for scheduling your time with us here this morning. I'm grateful for your presence. I am here to serve you. So give me a call at 877-927-6648. Internationally, you can reach out at 727-445-1044. Remember, if you've got a question, somebody else has got that exact same question. So don't do it for me. Don't do it for yourself. Just how about a random act of kindness? 'Tis the week to have random acts of kindness out there. So go ahead and call in. This is Magical Monday. This is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show right now. The Dow is up 71 points, trading out at 17,875. S&P up about, well, it's flat. It's trading out at 2,071. The composite up 9 points. She's trading at 47.74. Russell 2000 up 2 points at 11.97. DAX is up 57. FTSE's up 31. Gold is flat, trading at 11.96. Silver is off a nickel, trading at 15.97. Light sweet crude back a buck, trading at 56.09 out there. Let me got an email that came in during the in between the shows, or actually saw it in between the shows out there. During the first hour of the Trader's Edge, we covered gold and light sweet crude in detail. And the question says, hey Steve, if crude oil goes down to the $50 mark, making a 0.786, then where would the bounce take you to? Now, here's the key, and here's what the question is about. I'll take it back here. We're going to take a look at the quarterly chart first. Just makes it easier because I want to make sure that I answer this question properly so that each of you can follow along. So the $50 mark that the listener is referring to is the level that is the 0.786 retracement coming off the low from January of 2009, from that low at a price point of $33.20, all the way up to a high in the month of April of 2011 up at the 114.83 level. If you go from the low to the high, use your retracement ruler and use 0.382, 0.618, 0.786. It's the 0.786 retracement. It means it's 78.6% from low to high out there with price pulling back. That's a Fibonacci number, oftentimes a level of support. Doesn't have to be. You got to take a look at the candle coming in. You got to take a look at volume. But $50.67. The question is, where could it bounce to? It can't bounce to anywhere until we get some type of bottom. Just because price might get down there does not mean that that's where price stops, because if price breaks through $50.67, then what we're looking at is $33.20. That would be the next target level inside of light sweet crude. Now, if we switch back and take a look at the daily chart out here, and in this case, we tried to take a look at from a daily standpoint, in order for a market to stop going down, you need at least some type of bullish reversal signal, some type of bullish candle, a bullish engulfing candle, a piercing candle, a bull sash candle, a hammer candle, a morning star candle. You need some kind of reversal signal. Otherwise, just because it's green just means where price opened versus where it closed. Just because it's red, where it opened versus it's closed. That doesn't mean bullish or bearish. It's just color. So I've added color to my palette out here. So even if price gets down there, you've got to see some kind of reversal signal to even suggest that maybe, just maybe, that would be a bottom. Then to answer your question, and let's just assume here, the question is, where would it bounce to? Well, what I would look at on a daily chart is I would take a look at my last set of swing points, that your last swing point would be your ultimate target level on any kind of a bounce. I would also take a look at some moving averages. Inside of the case of light sweet crude, let's assume that somehow we got a reversal signal, which we did not a couple of days ago, and that light sweet crude had made a bottom, whether it was 50 or whether it was 52, 50, whatever the price was. Let's assume that we're there. The first thing you're going to be looking for, in my opinion, is going to be How does price handle that 13-day in this case here, exponential moving average? That's priced at 59.77. Does price just hit that and reject it and then trade lower because that has acted as resistance for quite some time? If it does close above it, okay, now you got maybe a little bit more of a bullish outlook. From a swing point standpoint, visually, when I take a look at this chart, this would be the swing point that I would be using in the trading session of November 21st. Now, I'm doing this just simply for educational purposes. Light sweet crude has not given us that bottoming pattern out here. But if it did, what I would say is my first outcome would be the 0.382 retracement. So the question of where could it bounce to, take your last set of swing points from high to low. If you do see a reversal signal, and use that 0.382 retracement level as your first target. In this case here, that would be $63.06. If price continues to move up into that level with some volume, with a wide-ranging bar, whatever it might be, then price could make a 0.618 retracement up at the 68.69 level. You'd then want to go take a look at A to B equals CD patterns on intraday time frames to really get a feel for it. But that's, in my opinion, how you would take a look at light sweet crude and use some price projections for where things could travel to. You certainly wouldn't go all the way back from high to low. At least I wouldn't. Now, long term you could do that, but I'm assuming that this is more of a trade versus I'm going to hold on this to, for a long, long time out there. So that's what's going on inside of light sweet crude. Just wanted to answer that question. Now, with regard to the markets out here, you got the Dow's up 80, the S&P is up a point. Now, the Dow is just doing a little bit of a catch-up here. If I take a look at the summation index for you, price in the summation index, and I've got the New York Stock Exchange on the left-hand side of my chart. Center seat out here is the NASDAQ Composite, and the upper right is the Dow. The NASDAQ Composite and the New York Stock Exchange on Wednesday went ahead and turned positive. Price got above the zero line inside its oscillator reading. The Dow did not even do that as of Friday, but that's a little bit different story as we speak today. And as I put in the newsletter, just because it didn't get above the zero line on Friday, we already got the reversal signal inside of the Dow the prior day out here. Now the Dow is just playing a little bit of catch-up, and part of that catch-up is going to go attack this swing point high from December 5th out there, and that is at 17,991. 18,000 is where it's likely got its sights set. We'll go take a look at the longer-term charts. We'll go look at our horizontal trading range boundary lines in a moment out here, but gold just playing a little bit of catch-up. Now, what's going to be key, in my opinion, for you to be observing and watching today? Well, it's going to be the 2-hour chart inside of the NASDAQ out here. If we take a look at the NQ futures contract, and why do I say that? Well, let's look at a couple different things out here. If I take a look at the NASDAQ, the NQ on the 2-hour chart, as it was making its move to the downside out here, little doji candle that took place at the futures close, 5:15 Eastern Standard Time. That was on the trading session of December the 16th. Little doji. Also happened to be a seventh wave move to the downside in the Chapman wave. Oftentimes that marks a great risk-reward setup for a trade out here. As it turns out, because you can have it as 1 penny, 1 tick below the low of that to say, hey, I'm either right or wrong. That marked a low. Now, off of that low, what we saw take place on Friday, this is coming into the 4 p.m. session. The market still was open through that 5:15 level. This is a 2-hour chart. But what we saw inside of the NASDAQ, off of that bottom, potentially a seventh wave to the upside. Not just a seventh wave to the upside, but also a little shooting star candle out there. That is the opposite of the brother. That happens at the highs out there. That is a reversal signal. We also saw a little bit of follow-through during that trading session that lasted to 5:15 p.m. What we haven't seen is any kind of close below that 13-period exponential moving average. On this chart here, that's the little dashed line that shows up on my screen out here. So we've got a potential for that seventh wave. Now, there is nothing more bullish than a failed bearish pattern out here. Yeah, it could be the seventh wave. It could be the third wave out there, because you certainly have what I believe you've got this little instant restart that took place on this trading session here at 6 a.m. Well, it didn't take place, but it took place within 2 trading sessions after that 6 a.m. session. That was back on December 18th. But here's the deal. When you get above resistance, which right now is the top of that shooting star out there, that's priced out at 43.0450. If you see a move above that, pretty good chance chance price is going to continue to run higher throughout the day. You will have had some failed bearish patterns inside of the NQ. So my opinion, you've also got this little evening star pattern out here that formed. That's a 3-candle session. That was between 4 o'clock this morning and 8 a.m. So we know where the sellers, in essence, are camped out up here, and that's where the selling. If those sellers can be overrun by the bulls out there, it'll be like the running of the bulls in, is it Pamplona, Spain? Is that where it's at? So I would say that is the stock chart to be paying attention to, at least one of them. Another chart that I would pay attention to is the your favorite chart and mine. That's the VIX index out here. Now, this is kind of interesting. If we look at the VIX index right now, that's the top portion of my screen. The bottom portion of my screen is the S&P 500. The 50-day exponential moving average on that is priced out at 1570. You're trading at 1592 right now. If, in fact, we see a move below that 1570 level, then the VIX index, the volatility index, will get back into bullish formation. You see a market moves higher. Now, that's not if you're coming off of the top inside the VIX. Obviously, the market moves higher. And there's a number of little tricks out there with regard to one-day rate of changes with inside the VIX index out here. But right now, the key level to be watching, bullish or bearish, is 1570. You're at 1592. A close below that says don't be bearish out there. If it stays above 1570, says okay. Just make sure that you've got some stops in place. So that's the second chart that I would be watching for that I am watching for inside of the market today. Excuse me while I take that technical swig of water out there. And now let's go switch over and take a look at what's going on the longer-term time frames out here. I mentioned the Dow. Let's go ahead and put the Dow up on my screen right now, INDU. And what's going to pop up here in a moment, let's come back. In fact, I'll take some of these lines off. It's always easier to start with a clean palette and then just simply add to it. So there we go. So what do we know about the Dow? First of all, the white line that you're seeing on my screen out here, it is a great trend line tool for the Dow. Great trend line because if we come back and take a look at the significant low that was put in back in October of 2011. Again, this is a weekly chart, so it began the week that began October the 3rd, so it's October the 7th, I believe, is the weekly session out there. If we use the bottom of that, which is, by the way, 10,404 is our touch point, and then we come out here and we use November 2012. That's priced out at 12,471. We use that as our touch point for our trend. Guess what price did back in the October lows? October 15th came right down and tested that level. A very important trend line out there. That's the first thing that we're going to look at. Now we're going to go look at, that's diagonal support out here. Now we're going to go take a look at horizontal support. As we take a look at horizontal support, this is a weekly chart on my screen. So weekly, I'm going to turn the monthly horizontal levels of support and resistance off. Now, those green lines going across my screen as I pull this back. This is data that takes us back into 1996 out here. So I'm using data from 1996 through today to be able to identify our natural areas of support and resistance from horizontal boundaries out here. We're taking a look at what the system is automatically doing. It's automatically identifying the largest number of opens and closes, doesn't matter which one it is, and that price level to identify where that significant level of support and resistance is. It's all the way these big dashed lines out here. We get back. Let's continue taking a look at the longer-term chart for the Dow. Steve Rhodes, TFNN. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 94 points. S&P's up 2. Composites up 9. Back to the Dow, the longer term, the weekly chart that we were looking at here a few moments ago. We were looking at the horizontal trading ranges out here. Now, once you identify the largest number, which are the two dashed lines on my screen out there, then we know the price levels. We know the dollar amount to add to identify our next price level. So it's equidistance. It's the exact same dollar amount that you're adding to the top and the bottom out here. So what do we know about the weekly chart here for the Dow? We know the weekly chart during the last week, as price came down, what it did was it was testing the 17,163 level. When price breaks above a horizontal level of support, a diagonal level of support, if price comes back and tested and rejected, it says, hey, that trend is very strong. Well, what do we know about this trend here? What do we know about the bullish trend? It is super strong out here. Price came back, found its footing at that horizontal trading range boundary line, and now price got below 17,163. It got to the 17,067. But this is a weekly chart with only its weekly horizontal trading ranges on here. You see, the weekly candle is going to close at different levels than a daily candle. Not Friday's candle for sure, but it's going to close the other 4 days. Well, the Monday open is going to be the same as the weekly. Well, maybe. It doesn't have to be the Monday candle. It actually doesn't have to be the Friday. Let's just say the dailies, the weeklies, the monthly can all, in essence, be different. It's going to be one day of the week that's certainly going to be the high, and one day of the week that's going to be the low on a weekly chart. Now, let's just let's come back and take a look at an add to this weekly chart, the daily horizontal levels out here. Those are going to show up in a blue color. So let's go ahead, Stevie. We'll turn that on just to get an idea because we're looking for natural areas of support or resistance. Okay, we're on a weekly chart right now for the Dow. What we can see here inside of the Dow, that price last week stopped right at the daily horizontal trading range, which was 17,798 out here. The actual close was 17,804. So it closed just above that level. Now that the Dow is above that area, as soon as the Dow gets above its swing point high from December, this is the weekly chart that began December the 1st out there, 17,991. PDG, pretty darn good chance that we're going to see his price inside the Dow head up to the weekly and or daily horizontal trading range. That's 18,281 to 18,465. That should be your price target out here. Now, let's just go ahead and add one more level. Let's just go take a look at the monthly time frames out here. Those are going to show up in reddish color out on our screen. And I've got the midpoints turned on. I'm going to leave those on. Give me a moment here. We take a look at the midpoints. So, the level of where the Dow should get up to, you're at 17,898. You're looking at ranges between 18,087, 18,281, and 18,465. I'm going to go with the 18,465. In fact, maybe even more so than that out there. Just depends. Here's the problem. This week we got a shortened trading week. You get above that level, you're going to start doing volume comparisons out here. It's just not going to have the volume to take a look at. But that is very likely where the Dow is headed to. It's up above resistance levels. Same thing when we take a look at the S&P 500. If I go ahead and put the S&P 500 cash, this is the weekly chart out here. This will go ahead and show us those levels. So the key level here inside of the S&P 500, if you're wondering why it's struggling a little bit, because it's gotten up to its resistance of its monthly horizontal trading range. That's that red line going across my screen. 2084 is the big number. Well, if in fact we see the S&P close above that level and 2079, that happens to be the high from the week that began December 1st. Well, then your next level for the S&P is up in that 2194-ish, 2211 type range out there, and that's what the expectation should be. Will it be a straight shot? No. But will it be a shot to the upside? Yes. So, in summary, what we've talked about here this morning and trying to understand the indices and where they're headed to. We'll go take a look at the ETF structures here in a moment. We're watching the NQ out here. That's given us, we know where the sellers are hanging out. And if the sellers get overrun, that says, hey, markets continue to motor on higher. 4304.50 is the number that you're paying attention to. You're trading at 4298.75. Yeah, there's been some reversal signals out here, but there hasn't been any pattern other than the potential seventh wave to the upside. If that gets taken out, nothing more bullish than a failed bearish pattern. That is the NQ, that's the Dow, that's the S&P, and taking a look at a monthly chart. Now let's go take a look at the daily charts here for the ETFs. Let's go take a look at let's start off with the Qs. QQQ, only up 0.25% this morning. That's up 24 cents out here. We'll do that when we get back from this breakout here. Steve Rhodes, TFNN. You're right.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 92. S&P is up 2 points. Composite up 9. So I said, let's go take a look at the ETF structure out here. So let's do that. Let's start off. We'll take a look at the diamonds. I think I might have said the Qs, but we're going to take a look at the diamonds first. So what do we know about the diamonds? Number one, we know that we've got well, first of all, here's what we know about the diamonds. Let's back up just for a moment. When we made the bottom out here, October 15th, major market bottom out here, just we have in prior Octobers. That is not uncommon for when the market makes a significant low during the year. October 15th, if we go from that low inside the Dow Diamonds, 158.27 to the high of 179.82, that's a trading session from December 5th. That's the one that we're dealing with right now. 4.2 million shares out there. By the way, today we've traded 2.2 million shares in the first hour of trading. Now, December the 5th out there was not a holiday session. So it's a legitimate candle session out here from a volume standpoint. 4.2 million shares is the B point of an A to B equals CD to the upside. So we know that the retracement from low to high was a 0.382 retracement. The number is 171.59. We saw price get down to 170.74. We've seen price come off of this C point out here with a vengeance. You want to take a look at? We'll just come back here and take a look at it visually. Take a look at this little V for victory shape bottom that formed back here on October the 15th. We actually got a stronger one right now, in my opinion. It is at least as strong, if not stronger, than we saw back there. Is the same pattern going to play out? I don't know. Are we in the favorable season seasonal cycle? We most certainly are. Should the markets move up through December 31st? They absolutely should. What's the next thing that we're going to look at? Forget about what markets should do. What are the markets doing? Well, if we take a look at that low of that December 5th swing point, that is at 178.99. Again, 4.2 million shares. 178.99. We're at 178.62. We've seen a high so far of 178.83, just below it. Looks like it's just winding up energy to be able to take on that swing point. If you see a close above 179.82 today, tomorrow, or Wednesday, with volume, meaning more than that 4 million shares today, you could easily do that. What does that do? That confirms an A to B equals CD to the upside. To what price level, you say? Well, remember, we took a look at the Dow horizontal trading ranges. I gave you some numbers there. Just the 1-to-1 takes you to 192.29. That's 19,000 out there inside the Dow. Yeah, 19,000. Forget about 18,000. That'll give you a 19,000 plus target out there inside of the Dow, give or take. So that's what's going on inside of the Dow Diamonds. If we take a look at the SPY out here, let me see. Did they fix this chart? They did not. Gosh darn, I wish they would fix this chart, because when we look at this SPY out here, that spike, that is not an accurate high, intra-session high. I have to get on the horn here this morning to make sure that they get that fixed. What do we know about the SPY? We're just simply going to be taking a look at that December 5th swing point. 91 million shares. We've been trading for an hour. 26 million shares. Pretty good volume for a Monday before a major holiday week out here. If, in fact, we see price get into that level of 207.55, you're at 206.81, so you're not that far away. Do it with more than 91 million shares. How about close above the high of that, which is 208.47? That will set up an A to B equals CD. We won't have to worry about that bad tick information out here. The A point is going to be our low from October 15th. Our B point is going to be that December 5th high, and our C point is going to be the low on December December the 16th out here. 1-to-1, uno to uno. A to B equals CD. Says 224.41 if, in fact, price can close above that level. That's what's going on inside of the SPYs. Let's go take a look at the Qs out here. The Qs are struggling this morning, only up 6 pennies. 12 million shares out here, just really kind of a sideways move. The Qs, though, really strong off of that C point of the A to B equals CD to the upside. Next level for the Qs, of course, when we took a look at the NQ, we know what the NQ needs to do, where it needs to break above. If the NQ can break above that level, I don't remember the number off the top of my head, that'll probably break the log jam. That'll go ahead and send the Qs up into the November 28th swing point. That's a swing point high. That is a shortened trading session. That was 17 million shares. Let's double it out there. We'll call it 34 million shares. You're moving today sideways. You're not moving higher. You're not moving lower. 12 million shares. There's been no directional indication from the QQQ ETF. Nonetheless, I believe that the Qs will probably head up into the 106.25 to 105.73 range, just simply based upon what's going on inside the diamonds and the SPYs out there. Well, let's go take a look at the Russell 2000, the IWM. I don't like this because I don't see anything moving here on my screen. That's always weird. We're getting to that. There we go. Things are back. I've had internet problems that are no fun out there. Let's go take a look at the IWM. What's the IWM? This is probably where we really get our message. So the IWM is now up and above. I believe it closed above it on Friday. The IWM's swing point of an A to B equals CD to the upside is November 25th. 26 million shares out there, and on Friday we saw a volume of 49 million shares. That is positive. The close was 118.78 was the number. The close on Friday, that was at 118.90. You saw 12 cents above the B points. You've got a confirmed A to B equals CD to the upside inside of the Russell 2000 out there. Inside your most bullish markets, does the Russell 2000, lead things, mean carry everything, mean pick up the slack? No, but is it a great leading indicator? Yeah, when it takes over the number one spot inside the marketplace out there, that is bullish, not bearish by any stretch of the imagination out here. The confirmed move here is 128.27 inside of the IWM. Let's go switch over to a weekly chart. Let's do the weekly chart here. I was thinking maybe monthly, but let's just go do the weekly chart out here. What do we know about the IWM? What do we know about the Russell 2000? Well, on the IWM's case out here, we'll just simply use the high from the month of March of 2014. That's in the 120.58 range out there. You get up above that. You certainly get up above the trading session from June in 2014. That's out at 120.97. You will have at least a 13.5 point dollar move out here, point move inside the IWM. You will have broken a long-term consolidation pattern out here, and that's down between about the 103 to 120. So it's more like a 17-point move, a $17 move inside the IWM, if and or when she takes out its highs out there. If not, it can't take it out, then we just simply have a triple top, and maybe we see some kind of retracement, and we'll cross that bridge when we get there. But right now, it looks PDB, pretty darn bullish when we take a look at the stock charts out there. Things that aren't bullish. Well, we got Goldilocks. You got gold trading back 450. Let's see, what's the U.S. dollar index doing? She's basically flat out here. Let's go look at gold. Gold really has not done a whole lot out here, but what it has done is it's really rejected its trend line. Now, this is a short-term trend line. This is on the daily chart. We looked at the monthly in the first hour. In fact, you can watch that archive on Channel 9 out there. You ought to if you're trading the metals out here, because we've seen a break of a gold. This is the weekly chart we're looking at. Let me put this back to the daily. One moment out here. What gold has done, even with these wide-ranging bars out here, this breakout, it's failed to break out. And now what we can also say, when we take a look at the daily chart out here, I want you to look at these closes over the last 1, 2, 3, 4, and even today's trading session. I don't know. This is a chart pattern out here. We've seen this before, and somebody has got their thumb. Buyers and sellers. Who can that be out there? I don't know. But when you take a look at these closes, it's not natural to see for a number of sessions in a row. This is from December 16th, from December 17th, from December 18th, from December 19th. Such a narrow range of closes inside of gold. I don't know what that means. It usually means bang, means hold, and bang. You know, we see a log jam that gets finally busted through. But at this stage here, the busted through looks more like to the downside than it does to the upside. That's what's going on inside Goldilocks. Of course, that is playing a little bit of havoc inside of the XAU, inside of the mining sector out here. In fact, the XAU right now, today, if we were to see a close here, there's enough of a move to the upside off of these lows from December 16th. This is a daily chart to tell you got an evening star formation. That's a bearish reversal signal inside of the XAU. A lot of time left in the trading session, so I don't know how it's going to close today, but tomorrow we can most certainly take a look at that. Now, moving to the upside out here, we got Chipotle. CMG is the ticker symbol. That's up about a little over 2%, up $14 out here. Looks like they've announced, what did they announce? Announced fourth quarterly full year results. I don't have the details out here, but if we take a look at what this thing is trading into, you got nice wide price spread today. Give me a moment here to turn that off. There we go. We've got some nice wide price spread out here. This is moving up into its most recent swing point. That is the trading session of 11/14, November 14, 277,000 shares. You're moving into it with volume 133 million shares. That says that Chipotle, if it can close above the 675.24 mark out there, that'll set up an A to B equals CD to the upside. Let's go take a look and see what that pattern would look like. The A point, B point, the C point, B. And December 16th low 1-to-1 would take you up into the $700.12 mark. That'll take you all the way back to its all-time highs, and that was set on August the 21st out there. That's priced out at $697.93. So Chipotle continues to look to be on fire. Hard to believe. $700 food stock out there, but there you have it. That is the way it is trading. Price line's up $13. Amazon is up $5. Juno Therapeutics, JUNO, that's up 14.5%. Let me see what's up on my screen that we haven't looked at here for a while, percentage-wise, or to the downside. Just looking here, that gives me pause to take a swig of water. You got Regeneron Pharmaceuticals, that's off $15. We haven't looked at Regeneron, so let's go see what's going on here. Is there any news behind Regeneron? Not that I see, so down about 3%. Let's go look at the volume behind the move, see what we have going on here. So this has This has completed an A to B equals CD to the upside. It had a 1 to 1.272 price projection, never got to it. That was at 447.02. Gave you a little bearish reversal signal. That's on the trading session of December the 10th. A little bit of follow through to the downside over the next couple of sessions out here. So you've got your sell the D point inside of Regeneron Pharmaceuticals. Now on Friday, the swing point is actually December the 8th, 580,000 shares, and price moved in there with 1.4 million shares. That's not too bearish out there inside of Regeneron. So Regeneron looks to me more likely that what it's doing is just simply consolidating up at these highs out here, and maybe it does want to go ahead and move and get to that 447.02 level. If it can get above 447.02, 481.55 would be the number. REGN is the ticker symbol. If we look at also moving here, let's look at Tesla. We haven't looked at Tesla in forever out here. TSLA is the ticker symbol. Let's go see what we've got going on here. So Tesla, how about this? Tesla completed a 1 to 1.272 A to B equals CD to the downside. That also very likely formed a Gertley pattern out here. Let me see. Was it a Gertley off this? Yeah, probably is. So we've got a Gertley buy pattern. That's taking a look at the swing point low from May the 9th, from that low out to the high out here on September 3rd. Your 0.618 level would have been, looks like 201.95. We got just below that for a day or two, and then a gap up. But there's your 0.618 Gertley buy pattern, and of course that was, not of course, but it was confirmed with a reversal signal out there. Just what you need. You got a key reversal session, the whole 9 yards, bullish engulfing. That was on the day of December 17th. We then saw a gap up, an additional follow-through out here. That was on December the 18th. So where is it that Chipotle is running to? Well, you'd have to say Chipotle probably running to this little gap down out here that took place between the swing point trading session, its most recent swing point on the upside, which is November 18th. That high, by the way, was 259.99, but the low, 255.51. That could be some support or resistance, I should say, out here. There was 7.9 million share move to the downside on the very next day, November the 19th. And that high out there was at 251.88. So that is one place that I would look for where Chipotle could head to. What I would also do is just probably take a look at a little trend line out there. So let's go decorate our chart. Let's go put the trend inside of Chipotle out there. So that's going to be an important level for it to also get over. Volume today, 2.1 million shares. Really not too shabby as Chipotle runs at least towards that trend. If we take a look at retracements just off of the last swing point out here, see what runs into that trend line, your 0.618 level at 234.57 and your 0.786 at 245.75. That is what it looks like. I'm sorry, I'm talking Chipotle. Hello, Tesla. Tesla is what we're taking a look at. It's Tesla. That's the one that had the Gertley buy pattern. That's the one that had the key reversal session, and that's the one that should be headed to that trend line out there. Sorry about that. I don't know why I had Chipotle on the brain out there. But we got that. We caught that just in time. Chipotle Motors. There you go. Big Al. Let's take a look at also moving out here. You've got... Let's take a look at Lockheed Martin. That's up about $3, about 1.5%. LMT is the ticker symbol. How about this? This thing here is at all-time highs. It was all-time highs on Friday, continuing to be there. It's taken out a swing point that was generated on November 4th. 1.7 million shares. You've done 260 today, but on Friday, as that level was approached, 2.6 million shares. We're going to give it the BOD, the benefit of the doubt out here, and that says we've got an A to B equals CD to the upside inside of Lockheed Martin. LMT is the ticker symbol. That ought to take us up into about the price level. You've got a 1-to-1 price projection, 209.06, maybe 216.32. Steve Rhodes, TFNN. Will be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. You got the Dow's up 94, S&P is up 2. Let's go check in on one of the weak sectors inside of the S&P 500, the XLE, the energy sector. Now, that is off $1.21 this morning. Really no big deal here, just an inside day as we speak thus far. Volume so far, 11.9 million shares. Moved higher with 46 million shares, the upside on Friday. So volume is a bit much on the pullback today, but it's an inside trading session. What do I mean by that? If you look at the high from Friday out there, that high was 80.67, the low 78.09. You're trading with inside that bar. If, in fact, the trade's with inside that bar today, volume, schmolume, it doesn't matter. It says that price should continue in the direction that it came from. What do we know about the XLE? The XLE made an A to B equals CD to the downside. It formed a, which was a 1-to-1 pattern. That price projection was 72.06. It didn't get down there. It got down to 72.51, close enough for my game and yours. Formed a bullish reversal signal out here, a key reversal session. That's what a key reversal session looks like out here. The prior day's high and low is exceeded. We got that. You come from an extended condition, just use that 14-period relative strength indicator as one of your tools. That certainly wasn't an oversold condition. That says extended. Plus, you've got the A to B equals CD. That qualifies as extended out there. And then the following day, you had a move to the upside. You had a confirmation of that move. So what is it that the energy sector, the XLE, is doing? Probably giving you a gift to buy it out here because the XLE wants to at least run to the top of the gap, and that's at the 82.61 level, to the bottom of the gap out here, and that's at the 85.15. You close that all of a sudden starts to become a little bit more bullish out here. Of course, in the XLE, you would want to be seeing what's going on inside of XOM and Chevron and Schlumberger out there. And if we take a look at ExxonMobil, this looks pretty darn pretty out there. That's pretty bad vocabulary out there, but nonetheless, it's already out of the bag. I don't have a choice out here. If we take a look at its most recent downtrend, a short-term one from November 21st as your touch point to then December 3rd. We saw ExxonMobil on Friday just simply power on through that with volume to the upside out here. So it has broken that trend. If we take a look at retracement, that bodes well for the energy sector, the XLE out here. It's above the 0.618. It says 94.84 is next on its cards. That's your 0.786 retracement. If we take a look at Chevron, CVX, if I'm not mistaken, that is Chevron out here. Now, in the case of Chevron, it's got its own little trend line. Of course, let's go ahead and extend this little puppy. Let's see if we extend that trend line. Let's pull this down here. There, so we use right about there. So it's also trying to do the same thing. Now, it moved higher on Friday, volume of 15 million shares. It's got a gap to the downside out here. You'd have to say the level of resistance could be the 108.43. Get above 108.43. That tells you about a change in trend inside of Chevron. Let's look at the last one, SLB. Not that it has to be the last one, and there's more than just three equities inside there. If we take a look at this, looks like more than a 1-to-1 A to B equals CD, probably a 1-to-1.268. But let's take a look at this pattern here. You'll see the same type of setup. You were in an oversold condition, and you had a key reversal session inside of Schlumberger. That's the trading session of December the 16th. Right now, it's a little bit weaker than Chevron, I would say, and a little bit weaker than ExxonMobil. But in its resistance area is probably going to be the December 5th level right now of 88.16. You get above that, then it says price ought to move down to or move up to the 92.30 level. Well, folks, stay tuned. Our man Basil Chapman, he's going to be up next. And as always, thanks so much for joining us here. And if you are traveling, be safe out there. And I look forward to seeing you bright and early tomorrow morning. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers subscribers of his expert market opinion each market day with his Opening Call newsletter. Right now, you can get a 2-week free trial to the Opening Call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.